Hey everybody, Brian.net. Just wanted to go over one of the videos here in the Futures and Options course in UC Davis. Uh, this video, which is number 7, then it leads into intemporal pricing theory. This is probably one of those critical moments in the world of futures trading, which is pretty well the heart, the backbone of the entire market, especially when it comes to commodities. Uh, this is all based around fundamental. Now, the key here is to take out the electronic markets. You got to remember that the supply and demand futures market has been part of this whole operation, how the markets work, has been around for 100 plus years. So before electronic trading came into play, along with all the fancy machine learning, quant, and all that stuff, this is how they worked, and they still work this way, despite what you may think in the electronic trading world. So essentially, let's say for oil, which is a classic example of this, we have their standard demand and supply in the markets based upon, let's say, seasonal, meaning in this case, as displayed in this video, the heating oil, where there's winter and summer demand and supply. And there's a relationship between the excess supply and excess demand, which also includes storage, and there's storage costs. So obviously for oil, that's related around not just warehousing oil, but also refining oil, which impacts the price of the commodity. So over the last year or so, this is very classic examples of how the oil markets have played out on a day-to-day basis based upon this very, I won't say simple theory, but theory. My point is to all this, I don't know why somebody out there would argue this, but this is how the markets work. Excess supply drives down the price. Not only that, but there's also factors of excess demand based upon maybe an extra colder winter or a warmer winter, which impacts supply. Just one example of many. This is why I focus on the fundamentals of the markets, because I can guarantee you when I try to have so-called experienced futures traders, experienced option traders, they can't explain the fundamentals. This is what's really driving the markets. And if you do not understand these fundamentals, you should not be in trading, because you will lose money, or at the best, you will not be able to maximize the opportunities that you could use to forecast the markets properly. This is why I'm going through this very lengthy exercise, only available for my Quant Elite members, and I'm also doing that through code examples and lots of notes. So this is just one example available for my Quant Elite, and eventually this will be presented live. But again, I keep harping on about this. You need to read the book around this course. You need to watch this video course series to fully understand this. If you are a commodities trader, if you follow indexes, specifically around equity, you need to understand these fundamentals. If not, the markets are going to send you signals that you're going to miss because you don't know anything about them. And these are the fundamentals that make the real traders, the real commodity traders, lots and lots of money. And that's on the future side. When you come later into the course around options trading, you'll understand how the options market can make you a boatload of money understanding these fundamentals among the fundamentals of option trading when it comes to commodity trading. I implore you to understand this. If not, again, you shouldn't be in trading, and you will be missing out on a lot of opportunities that the market's sending you, but you just don't know about it. That's all I'm going to say. And remember, I've said this before, that what I'm showing in this code that's available in my course series, I'll be removing all this code, all these presentations at some point months later, and you'll never ever see these again, at least from my perspective. And the important thing is I'll be using all this data that's generated from it as part of a new analytical service. It'll be part of my Quant Elite, which means it'll be open for real traditional traders, and I'll have a whole community built around that, hopefully. So that's the direction I'm going in. But again, today understands things like intemporal pricing theory. Very, very important.